83. We heard earlier in the hour from Guggenheim's Scott Minerd on what the Fed reaction might be to all this.
I think the likelihood of QE3 increased dramatically today.
So Scott says basically more stimulus is coming from the Fed. They're going to go, that's what QE3 means. They're going to try to stimulate the economy, buy bonds, whatever the action might be. John Browne actually pretty much agrees that the Fed will try, senior economic consultant at Euro-Pacific, former advisor to British Prime Minister Margaret Thatcher many years ago, and he says the QE3 is coming, but the problem, John, is whether or not it will be too late. Will it work?
Well, first of all, I don't think it will work. It's merely passing on today's problems of ours onto our children and other generations. But secondly, I think it's too late. It normally takes between 12 and 18 months for this money to trickle through, unless it's a direct grant of money to individuals, which of course would be highly inflationary. It's exactly the reverse of what Margaret Thatcher did. Margaret Thatcher did almost the exact reverse of President Obama. First of all, she didn't shirk today's problems, she faced them. Secondly, she replaced uncertainty with clarity. She deregulated savagely. She cut tax enormously, the top rate by almost 60% immediately. And of course, that unleashed an economic explosion, and we were therefore able to repay government debt. So it was a highly successful thing by doing the reverse of quantitative easing and of what the president is doing.
Well, that, as you said, is not that particular approach is not going to happen now. Whether we debate it or not is almost a moot point. But the idea of what does happen and what happens next, one of the things people are bringing up today, I've had some notes about it and people bringing it up, say, hey, maybe we should start talking about whether we're headed back into recession, a global recession. So Scott Minerd was on earlier. He's a smart guy from Guggenheim. He's on all the time, very respected investor. And he was negative about a lot. But he said, no, we're not headed back into recession. So the gas prices have come down. That helps out and other things. So, yeah, it's a soft patch. It's rough. But we're not headed back into recession. I know you think differently, right?
Yes, I think we're still in the same recession, gaining pace that we were in before, that has been camouflaged by quantitative easing and huge grants of money and borrowing by the government. And it's created very low interest rates, as you've said already on the program, such that the government bond market has now become extremely dangerous. And those people that are stupid enough to sell gold and silver to get into treasuries are like getting out of the lifeboat back onto the Titanic.
Treasuries
now, if you're on the Titanic...
Yep. No, go ahead.
Yeah, the Titanic... Well, the Titanic, when you were on it, looked good. It's better than the cold water, and therefore a Treasury today looks good. But you just wait until interest rates start to rise and see what happens to Treasuries. It's a very bad bear trap, in my opinion, and those people that are correctly hoarding cash are hoarding real cash, which is gold and silver, which they should have been doing since 2000, and they would be up approximately 600 to 700%. Depending on the mix between those two metals.
All right, John, it's always good to see you. And no, go ahead and add that one last point, and then we got to go.
Well, I think it's heading up again. In other words, I think it's not just sitting there. Gold is, if they do quantitative easing, which is probably going to be also mirror imaged in Europe,
right,
it's going to be a massive inflation down the road.
All right, and then gold is up a lot today. The Treasury yields are nuts. All right, John Browne with us. Thanks a lot. And, you know, on Capitol